you also have a lot of experience in both new customer acquisition and servicing. So you kind of sit in a unique spot where you see that full life cycle of a loan, from filling out a web form to collecting the payments, right? And that's a unique place to sit. 'Cause I think oftentimes in the industry you get people who are pretty siloed at what they do, and they stick in
Hmm.
they stick in that niche. I'd love to hear, like, over the past 12 months, I feel like there's been a lot of false starts with the mortgage market, right? Hey, rates are going to drop. Oh, wait, no, they're not. Hey, the 10-year treasury just hit 4%. Is it going to drop below? No, actually, it's going to jump to 4.8.
Yeah.
There's been a ton of volatility. So what are the changes that you've seen over the past, let's say, we could say a year. We could also say 6 months, I think.
Yeah, I mean, obviously it's been very volatile for sure. There's a lot of uncertainty. I mean, we see a lot of that play out in the news, and as it relates to mortgage rates, it's been, you're right, a lot of false starts. I mean, we were all expecting that we were going to be cruising down into maybe the high fives by this point in time, and here we are, high sixes, and sometimes back up into the sevens. And um, I've seen in the news recently, and I've seen it with some clients. Uh, there's more aggressive recruiting of loan officers happening very recently. So it seems like the larger companies, and they're seeing I'm hoping, right, they're seeing the writing on the wall that, hey, over the next several months, we will start to see an increase in mortgage production. I think when you're starting to see signing bonuses being pushed out there and more recruiting efforts being pushed out there to hire loan officers and bring them in and train them, that's a real sign that companies are putting their money where their mouth is, and betting on that. So, we'll hopefully we'll see that. I've, really, I mean, I'd even stretch it back further though to say the last 24, maybe even 36 months, I've seen a lot of folks, a lot of loan officers, very talented loan officers migrate over to the broker channel. And it's been a really interesting dynamic to see that. I think we see some, if you want to call them mega brokers, who are kind of mimicking that consumer direct model, but in the broker channel. And it's been paying off quite well. And so we've seen a lot of growth there, and I'm really interested to see that as mortgage rates drop, as the market starts to, quote unquote, come back. Do we see those very talented, high producing loan officers stay in the broker channel, or do they go back to that call center consumer direct model? I think a lot of them are going to stay broker. But it's been a really interesting dynamic because, from the wholesale channel, the broker channel, the market share was down, I think, 7 or 8% right after the financial crisis.
Mm-hmm.
And independent mortgage banks, for over a decade, started dominating the landscape because traditional banks backed off a bit. But over the last 2, 3 years, we've really seen a lot of investment in the wholesale channel. We've seen a lot more loan officers go to the broker wholesale channel. And so I'm really interested to see, if that continues and how much that continues over the next 3 and 5 years.